Hello, I'm Brandy, a licensed IRS enrolled agent with more than 20 years of experience in individual, small business, and corporate tax, tax advisory, accounting, and auditing. If you're starting a new business, you've likely heard a lot of talk about write-offs. But here is the truth. Great deductions don't come from clever tricks. They come from having real business expenses that are tracked and supported. Good record keeping serves you in three vital ways. It reduces your tax bill by capturing every dollar spent, it makes your quarterly estimates more accurate, and it makes year-end filing faster and far less stressful. The golden rule: ordinary and necessary. So, what counts as a deduction? Typically, it's any expense that is ordinary and necessary for your field. The key is that the expense must be tied directly to your business activity. While some items are fully deductible and others are limited, documentation and a clear business purpose are what make those deductions defensible if the IRS ever asks questions. First year focus categories. Let's walk through the common categories you'll likely see in your first year. Startup and organizational costs. This includes formation fees, initial software, and early marketing. Software and subscriptions. Think website hosting, accounting tools, and industry-specific apps. The home office. If you have a space used regularly and exclusively for business, this can be a significant benefit. Vehicle and travel. These are deductible when tied to business, but they require diligent mileage tracking. Professional services. Fees for bookkeeping, tax prep, and advisory are almost always deductible. Our goal is to categorize these correctly so you get every bit of the benefit you're entitled to. The no friction tracking system. How do we track all this? We start with one simple rule: separate your business and personal spending. Ideally, you should have a dedicated business bank account and credit card. From there, aim for consistency over complexity. Assign categories monthly, store your receipts digitally, and track your mileage as you go. The best system is the one you actually use. Avoiding common pitfalls. Before we move forward, let's avoid the most common traps. First, never mix personal and business funds. It's the fastest way to create a tax headache. Second, don't forget irregular expenses like annual renewals or equipment purchases. These can change your tax outlook significantly. And finally, remember, transferring money to yourself isn't automatically a business expense or payroll unless you have a formal payroll system in place. The big picture: quarterly planning. Ultimately, clean records lead to accurate quarterly planning. We want to base your tax estimates on real year-to-date profit numbers, not guesswork. The better your records, the more confidently we can avoid underpayment surprises. Your next step: for our first session, bring a year-to-date income and expense summary. Even a simple spreadsheet is fine. We'll take that data and turn it into a clear professional plan for your business. Let us help you create and maintain accurate bookkeeping. Click the link to schedule a free consultation today. We look forward to working with you.